Hi traders, in today's video I'm going to talk about how to stay profitable with a trading EA long term. Now the first thing is, what is a probability amplitude? A probability amplitude is basically a complex number in quantum mechanics to describe the behavior of systems. Now this is very important because in my following series I will talk about topics and how to predict the markets with the use of quantum mechanics and how the two things are related. If you watch my videos for a while, you already know that we will use the understanding of quantum mechanics not really to predict the markets, but to understand the movements behind the markets and to make good decisions based on that. If you wish to stay profitable long term with EA trading, then my first tip for you is to have side projects beside trading. So basically you shouldn't trade if the only thing in your life is trading. You should start trading when you have projects like for example, I started coding and when I took my trading seriously, I took my programming skills just as seriously, and so I learned the two things at once, and this was a great thing to focus both on trading and programming. If you have just one thing in your life and that is trading, you can't really be profitable long term and in short term, because your emotions will just kick you in the where, and so you will fail over and over again in trading because you won't know where to stop, and you will move your stop losses and you will make losses over and over again because you are too obsessed with that one trade or with just trading. And if you have side projects in your life and you do other things, you will let your EA run and you will just take a look at it like once in a day or once in a week, and you will analyze the results and you will be objective about trading, and that is what you need. Also, I have seen it so many times that traders are taking too much risk, like way too much risk for their own emotions and their current psychology, and because they are not so advanced with their emotions and trading psychology, they don't know that they can't take like even a few percent of drawdown. And I met this so many times that they say that, yeah, my max drawdown can be like 20% and I'm completely fine with it. And in reality, when they lose only 2%, they are going crazy. They think it's the end of the world, and I tell them, like, you said this is 20%, that is comfortable for you, and they don't even know why the 2% is just so big for them. It is because they are not prepared for the warfare of the emotional side of trading, so they can't really deal with that loss. It is actually a commonly known habit of gamblers in the casinos and stuff, because they think that they will always win, and then when they lose they are going crazy and they blow their entire account because of that. So my advice is that don't take too much risk when you just start trading and you don't really know your risk-taking profile. So take like just 1 or max 2%, or let's say 3, but 3% should be the max that you are taking as a risk if you are just a beginner trader. Of course, if you know yourself and you are an advanced trader, that's a whole other thing. But when you start trading, you will blow your account very fast if you don't start with a lower risk profile until you know yourself better and you prepare to the warfare. My next advice is that you should set up an EA when you start trading with it, and you just need to set up a demo account just the same size as your live account will be, and run the EA on the demo account for approximately a month. Because based on my experiences, one of the biggest mistakes of beginner traders and even like semi-advanced traders, that they don't have the statistics of their EA because they haven't tried it on at least a demo account before, and so they don't know when there is a losing sequence, if it's normal or not, or how the EA will behave, what are the average consecutive wins, losses, and the global maximums and minimums. And so they don't know the statistics, the probabilities behind the EA. And so when there is just anything like slightly unpredictable happens, they are going crazy, and they stop the EA and they say it doesn't work or stuff, and it is just not the truth. They just don't know the statistics of the EA they are using. So in my opinion, you should run the EA that you start with for like a month on a demo account or a small live account, just completely free of emotions, and just analyze the data that you got from the test, and then you will be much more prepared. Next thing I recommend is to learn a little bit of mathematics. And I don't say you have to learn like hardcore mathematics, but just learn a few things about probability theory at least, because even the smallest amount of mathematics you will learn, it will go a long way in your trading journey, believe me. Because I see that many traders don't think that math is like important in trading. It will lift you above like 90% of traders in the markets. Like, learn how casinos are making money and basic stuff that you can find on the internet, and some basic calculations that you can do. I hope you enjoyed this video.